Who knows how this plays out, but I think that people are focusing on the wrong metrics. They're not focusing on driving global usage and adoption of a cryptocurrency. They're focusing on the philosophical side of it, which may or may not be the right thing.
Humans of Bitcoin is part of the Bitcoin.com podcast network. Learn about Bitcoin, create a wallet, and buy your first Satoshis all at Bitcoin.com.
Hello and welcome to Humans of Bitcoin. This is Matt Aaron. Vinny Lingham is on the show today. You've probably heard of Vinny. He's a prolific entrepreneur. He's founded and had several successful exits. He's on Shark Tank in South Africa, Dragon's Den, and he's one of the Bitcoin OGs, along with Roger, Eric Voorhees, Brock Pierce, etc. So he's seen the ecosystem for a long time. And one of his startups, Gyft, used to have a high percentage of all the transactions on the Bitcoin blockchain. So this is behind the scenes look at Vinny's life, the future of Bitcoin, his views on cryptocurrency in general, and a look at Civic, his startup, which is identity on the blockchain. And we talked about that on Blockchain 2025. We'll link to that in our show notes. And before we start, so I mentioned Blockchain 2025. We have 4 shows on the podcast network: Humans of Bitcoin, Blockchain 2025, This Week in Bitcoin, which is a weekly news show every Friday, and Calle Bitcoin in Spanish. We have over 100 episodes now. The number of subscribers, listeners going up in spite of the bull market, but we'd like our reach to continue to grow. So if you haven't already, please subscribe, leave a review, share with your friends. It helps us get the show out to more people. So now we're going to bring in Vinny Lingham. Enjoy the show. Vinny Lingham, welcome to the show.
Thanks. Great to be here.
And so, Vinny, I've been podcasting for a long time. I'm an entrepreneur in the food space, and I got into Bitcoin last year because we had a bad harvest here in South America, and I had all this time, started learning cryptography. And I joined a Facebook group called Advanced Crypto Asset Trading, and I became friendly with Miko Matsumura. And I'm very impressed by this industry. And I remember one time people were talking about, base layer protocols for dApps like Ethereum. And I put this question and I said something along the lines of, what happens if someone is developing their dApp and they decide they need to switch protocols? And, I put for example, Civic, and then someone just put Vinny Lingham, and then you just responded in 15 minutes and you just said something like, we're working on that, exclamation point. And I was like, wow, and you've been in the industry for a long time, just like Roger, obviously, who I work for. And I was like, wow, I love the accessibility of the industry.
Yeah, I think it's gotten a bit much now. It was a lot easier to be accessible when there was just, a few thousand or even a few 100,000 people in it. Now there's millions. And so at some point you've got to just say no to people. I have to, ignore emails. I have to ignore messages. There's just too much. I mean, at one point I was just about anyone because it was such a small industry and you kind of want to know everyone working in it. Now it's so big and a lot more mainstream that you kind of have to be a little bit more reclusive. Otherwise, everyone just will suck up your time.
Totally, man. I mean, you have a project you're working on that requires tons and tons of attention. So I want to go back. I've watched some of your previous interviews before we get into Bitcoin, back to South Africa. And you mentioned in one of the interviews that I guess it wasn't Cape Town or Johannesburg. It was a small town in South Africa. And you said there's good things and bad things about it. Could you elaborate on that, growing up in that part of South Africa?
Yeah, I think, I grew up in a small, kind of beach town on the coast of South Africa, the East Coast. So it's called East London. Yeah, I mean, the good thing is you're kind of protected when you grow up. Like all small towns, you don't really see the big world. I mean, I only really went to big cities when I was in high school. So I toured Cape Town, Johannesburg, and got a taste of it as I was growing up. Like, wow, okay, the world I live in is actually a lot bigger. And, you watch movies and you kind of think you get it, but when you actually are standing in a big city, it's a different world. And so from my perspective, it is really nice that I grew up in a small town and I had a lot of free time. I spent a lot of time reading in libraries, coding from a young age, actually. There's just nothing else to do, right? And so there's pros and cons, as I said.
Gotcha, for sure. So outside of reading, learning, coding, did you have any other hobbies growing up?
Definitely video games. Bit of a gamer. So played all the Sierra games, Space Quest, King's Quest, Rogue Quest, etc. Had a lot of fun with that. But I was always a bit of a tech geek. And so if it was technical, gadgety, and new, I'd be there. Oh, and watching movies. I was a big movie buff.
Cool, man. Well, dude, I feel like a lot of people have probably told you this, but like one of my favorite documentaries is Sugar Man and Rodriguez.
Yeah.
Yeah, I got to ask, man, was it like that? Was he really that famous growing up? People knew about him just like the Rolling Stones.
Yeah, I mean, it was kind of crazy that I only realized that the rest of the world hadn't heard of Rodriguez until the movie came out. So even though I've been living in the States for 5 years or 6 years, never realized that was a South African cultural phenomenon, not a global one.
Yeah, it's so cool. And listeners at podcast.bitcoin.com will link to that in the show notes. It doesn't really have anything to do with Bitcoin, but it's just an awesome documentary. Okay, and so obviously you're tech savvy, you're coding from a young age, and then you dropped out of college, I believe in your senior year, to start a business.
Well, actually, I dropped out because I ran out of money. I mean, the reality was it was the 98 emerging markets crisis. So by 99, I was like, well, I can't afford to go to school. I didn't have the money to complete my studies, and the interest rates were like 26%. The country was kind of falling apart at that point. It was really bad.
Okay.
And so I could have probably gotten sponsored and a bursary and all those things, but it was clear that it just wasn't the path forward for me at that point. And I decided just to leave and go and chase the business sort of world. I mean, it was kind of sad for me. I went through a bit of a down cycle. It was very, very low. I was the top programmer in my class, and by a mile. I mean, I used to help people finish their homework the day before and rewrite all their spaghetti code and stuff. So I was actually well known in my class. I think the lecturer tried to skip me a year even, and I just had a lot of experience in coding and whatnot. So it was a very, very depressing situation for me.
And so, Vinny, I'm not that aware of, I'm not sure if everyone's aware of the crisis in South Africa, but 98, 99, it was just hyperinflation in a lot of emerging markets around the world.
Yeah, it was actually led by Russia. I think Russia had a major emerging markets crisis, and then there was just a loss of confidence in emerging markets and currencies. And so those currencies were globally just dropped. The floor dropped out of any emerging market currency. And so if you were living in those parts of the world, your currency versus the dollar was just falling apart. And so the governments had to raise interest rates in order to stem the outflow of capital.
So essentially, like in layman's terms, the amount of money you had for your sophomore or junior year was fine, but then because it was in US dollars, that you couldn't afford your senior year. So you were forced to drop out.
Well, actually, it was more about my dad's company. It was highly leveraged. So it was one of those businesses, it was a catering business. So they had a lot of catering equipment, and he was always paying for my studies. So catering equipment, and that's financed. So the problem is that when interest rates go up from 12% to 26%, your payments basically go through the roof. So his business was just in a lot of trouble. So it went into liquidation at that point.
Wow. Okay.
Yeah.
And it's interesting, what's happening in Turkey. I'm in Colombia, and so next door in Venezuela, which is, I guess, a really high percentage of users on local Bitcoins, the unfortunate tragedies of just countries' economies breaking down and their currencies getting inflated always seems to lead into, at least recently, higher awareness and use of Bitcoin.
Yeah, we had the similar thing happening in South Africa. So after emerging markets crisis, Zimbabwe started doing land reform as well, and that just sent the currency spiraling. 100,000% inflation per year. It was kind of a joke. Like the Zimbabwean dollar was the cheapest toilet paper you could find.
Yeah, I've heard about that. Okay, so you're in South Africa, and like you said, man, you were a veteran entrepreneur before Bitcoin, right? And you bought and sold companies, doing like Shark Tank, all that type of stuff. I'm curious, though, how did you discover Bitcoin?
Well, actually, so that was back in 2012, late 2012, early 2013 with Gyft. I had heard about it before, but I kind of ignored it because I used to play World of Warcraft, and when someone told me that there's like this mining thing that you have to do, I kind of like equated it to, oh, well, the Chinese miners are going to own this the same way they own mining in Warcraft, right? I wasn't wrong, but I probably should have mined some myself first,
Yeah.
And it's kind of sad because I had an Alienware machine back in 2009, actually. I bought one, and I could have mined a crap load of Bitcoin on that thing.
You wouldn't have had to do an ICO for Civic.
It would have been great, but I didn't. So I want to buy my first Bitcoins like late 2012, early 2013. Early 2013 actually, and it was mainly because when running Gyft, one of the issues we had was.
And sorry, Vinny, can you explain to users that aren't familiar what Gyft is?
Yeah, so Gyft is a mobile gift card platform. And one of the problems we had was that people buying gift cards used stolen credit cards. And so we had to be very strict on our credit card sort of purchasing rules engine. And we got hit by a ton of fraud. And when you have a product with like a 7 or 8% margin and credit card fees are like 2 to 3%, it's a very low margin, high volume business. But one chargeback hits you for like 20 cards, right? So you have to make all that money back. And so it was very tough. And then when I went looking for alternative payment mechanisms, so we looked at PayPal and a couple others, Bitcoin was great. It was cheap. It was fast. It was free. Effectively free. I could effectively accept Bitcoin with zero confirmation payments. And we did over 100,000 over the subsequent years with no double spends. And for any amount from $5 up to $2,000, you could instantly get a gift card out of the system from us. And so we were the biggest merchant in the Bitcoin space at the time. And so we effectively allow people to spend their Bitcoins at 55,000 physical retailers across America and a lot more online as well. And so it became very popular, doing, like I said, tens of millions of dollars in sales, in Bitcoin sales. At one stage, we were 5% of all blockchain transactions on the Bitcoin blockchain.
Wow.
But, I sold the company to First Data in 2014, stayed on for another year and a half and helped scale it up, went through the IPO with them. It was the biggest IPO in 2015. Yeah, then I left to start Civic, which was built on Bitcoin, on the Bitcoin blockchain, using the node infrastructure that exists to create a decentralized identity platform with all the sort of, I'd say, philosophies of decentralization, identity, but, trying to merge it with the real world where you have an identity that you can use.
For sure. And so a couple things. We'll get into Civic in a couple minutes here, but I want to mention two things. One is we had Ray from Paxful on the show, and a lot of people, obviously you're very aware, but most people I would say listening are not aware of how large and also how important the gift card market is. And, and Paxful has people in Africa buying Bitcoins with Skype credits, Amazon gift cards. Because of all the financial banking restrictions, currency problems, the reality for a lot of people is gift cards are kind of the way to go. And if you tell a lot of people in the United States, they would not be aware of that. And second, this interests me. I mean, you're a member of the Bitcoin Foundation. I don't know how active it is, but I mean, you obviously with Gyft, that gave you some clout there. How did you, hook up with the Bitcoin Foundation?
Well, I was an early supporter, but then I got pretty dismayed by all the fraud and antics that was going on with some of the previous board members.
Sorry, can you elaborate on that fraud?
Well, there was, I don't want to go into details and all the rest, but like you can look up the data, the details. So before I joined, it was established by effectively Gavin and Reeson and a couple other people back in the days to create a point where people you could raise funding for Bitcoin development in the early days and promote Bitcoin, also just defend or argue I'd say legal statutes, etc., and help protect the rights of Bitcoin. I think it should be more seen as a trade industry as opposed to owning and controlling Bitcoin. Obviously, no one can do that. So it was more like in the real world, there needs to be some representation because like someone needs to be able to go in front of, the Senate and say, look, we can't control the network, but let's explain the situation, how it works, etc., and educate. So it's more for like educational purposes and how to educate the world on Bitcoin and how to educate lawmakers, especially, and not, I think in the early days, it did a really poor job of governance. And so you had a lot of the Bitcoin money was spent poorly and frivolously, and a lot of bad things were sort of happening. And then I got together with Bruce Fenton and a couple other guys, and we wound up cleaning up shop and brought in a whole bunch of other board members. Lou Clausen came in as executive director. So Brock Pierce was the chairman. Brock obviously, I think, pulled people together and said, look, let's try and run a legit organization. And it's a non-profit at the end of the day. There's no profit. And so I was willing to join it because I have a strong background in governance and as a board member. I only sit on two boards. I sit on the Civic board and Bitcoin Foundation board. I don't do anything else. I don't do boards. I do advisory stuff, but not boards. And by having someone like Lou on board, who I really trusted as the executive director to run it, I felt comfortable that my name's not going to be tarnished by allegations of fraud or misconduct or whatever, and we can rebuild it. And so I think we've done a good job over the past couple of years. I think we've been a little resource constrained, but we've been addressing a lot of lawmaker concerns and issues. And when these lawmakers have issues, they look up the Bitcoin Foundation and say, well, what are you guys doing? What is this, etc. And we respond and we help educate them of what Bitcoin is, etc. Otherwise, we're going to find ourselves in a world of pain where they get too aggressive. Now, I think the need for the Bitcoin Foundation has probably diminished in some respects because it's become a global phenomenon now. But I think it's a good rallying point, and I think we're doing an important, thankless job, which no one recognizes and notices. So people don't see what we're doing because we get mail and letters and all sorts of things from states, governments, etc. And it's like request information, or we'd like to, have a discussion on Bitcoin, and then we have to educate them that A, we don't control Bitcoin, but B, we can actually help you guys understand it and point you in the right direction. And we're just a rally point versus actually a controlling body.
That's really interesting. Yeah. Like Roger talks about it. Like at Bitcoin.com, there's, a lot of newbies will contact Bitcoin.com thinking it's Bitcoin. They're like, hey, I don't have access to my wallet. Can you send me my Bitcoin back? So that's interesting. And obviously there's been tons of developments, the split from Bitcoin, Bitcoin Core, Bitcoin Cash. There's, some advocacy groups in DC that, that do a pretty good job. MIT there's more advocates, not just the Bitcoin Foundation. But that's interesting. What you're saying is that, and right now I would say that from my perspective, at least, looking at, Bitcoin.com, Newsdesk, CoinDesk, Cointelegraph, the Bitcoin Foundation in terms of news, it's pretty quiet. So I guess your point is that to this day, you're still contacting governments and so forth and doing a lot of behind the scenes communication.
Yeah, I think I'd say we're more proactive in the background as opposed to, we're more reactive. Yeah, we act more as a reactive body where people come to us and we respond to them. We are proactive in certain areas, but it's more about, again, we do, I think there's a blog and there's some news updates. There is some happening. We have a board meeting every month. We discuss what we're doing. We try and get involved. But there's only so much we can do. But I think the main thing is that we actually help educate and point people in the right direction. And it's an evolving space. So let's see how it plays out. We've got some news coming out soon, the next week or two. I think it's a long-term, again, it's a thankless job, right?
Yeah, for sure. Okay. And so with the Bitcoin Foundation, explain this to me. I mean, how does that work in terms of BTC and BCH? Are you guys only with BTC?
We're going to be taking a position on that. We're still discussing and debating it internally. I mean, the reality is that it's just a really difficult position to take because a lot of people from the Bitcoin BTC side don't like the foundation because they just don't understand what happened after, all the kind of bad stuff happened. So there's this stigma attached to the Bitcoin Foundation. And then the Bitcoin Cash people are more obviously in favor of supporting the Bitcoin Foundation. So here you have a situation where I would say there's enough people in Bitcoin that don't like the foundation because of the history and don't realize what we've done since, that it makes it very difficult to stay aligned with them only and serve their needs if they don't want us to get involved.
Gotcha.
And on the flip side, you've got the Bitcoin Cash folks who are arguing that we want to be part of this foundation. We have a legitimate right to the Bitcoin name and brand. This is a fork of Bitcoin. So this is a complex situation. Who do we serve, right? In essence, when a lawmaker is coming to us about cryptocurrencies, they're not looking just at Bitcoin. They're looking at Bitcoin, Bitcoin Cash, and all the other cryptocurrencies as well. So, we can make a position that we're only going to argue for the rights of Bitcoin people. But then, if they decide, okay, well, we're going to go after Bitcoin Cash, or we're going to go after Ethereum or something else, and they pass the law which then affects Bitcoin as well, well, we're not really serving Bitcoin either. So it's a very difficult situation. So I don't have an answer for you just yet. I think it's one of those things where we're still discussing and debating internally as to how we deal with this.
Sure.
But hopefully we'll have a conclusion on that soon. But it's just not clear cut. I mean, so there's a German pastor, Lutheran pastor named Martin Niemöller, and he wrote a poem called First They Came. And it's first they came for the socialists. I did not speak out because I was not a socialist. Then they came for the trade unionists. I did not speak out because I was not trade unions. And then they came for the Jews and I did not speak out because I'm not a Jew. And then they came for me, and then there was no one left to speak for me. And that kind of is the problem right now. If we don't speak out for everyone and we just leave it to Bitcoin and say, well, we're only going to represent Bitcoin, we may be in a situation where Bitcoin, if it's all that's left, there's no one around to protect it. So I think we're stronger as a cryptocurrency community if we protect the rights of all cryptocurrencies, as opposed to saying we're just focusing on Bitcoin rights. But that's one view. The other view is everything else is a shit coin, and Bitcoin is the only coin out there, and that's the maximalist view. And up to now, the maximalists have been wrong by virtue of the fact that Bitcoin doesn't have 100% market share and probably never will. So, where do we go?
For sure. Yeah. It's incredibly complex and there's a lot of players. I mean, listen, Bitcoin.com. I mean, you're on our podcast network. We're very polarizing, right?
Yeah.
And it is a shame to, I guess, like ad hominem arguments to be judged by some type of subjective or like one comment as opposed to what we're doing in 2018. It seems like the same thing with the Bitcoin Foundation. That's interesting because I mean, Brock Pierce, obviously, with EOS still, I believe, and you went to Ethereum and Civic. I mean, this whole complex battle with Bitcoin and block size, do you see long-term ramifications from this?
I think that's exactly how this plays out in the long term. I don't think that anything in the short term matters.
Okay.
I think it's all 2, 3, 4, 5 years from now, we'll see what, the decisions and the way things played out over the past 12 months will only rear the ugly head in years to come.
Okay.
And so I'm just patient about the whole thing. I'm like, well, let's just see how it plays out. People who are calling early victories one way or another, I want to see how things play out. I have a long-term view.
Gotcha. Okay. And which tends to happen. So there's just a lot of knee-jerk reactions. We're still so early. And so you believe that basically your long-term view is that people are coming to foregone conclusions now. It's just too hard to tell. Let's see where this is 5 years from now. Nonetheless, we're going to look back and we might look back at, X thing or Y and say, wow, that really had a huge impact in 2016, 2018.
Yeah. I mean, the biggest issue right now is just adoption, right? So even Bitcoin Cash, the guys are kind of going off the rails with this like 32 meg block and increasing to 128. And on both sides, like, why do we need 32 meg blocks? Like the whole point of the debate was that, well, can we just have a block size that doesn't hit its limit and increases fees in the short run while we drive adoption? And Bitcoin didn't get that right. And so the transaction numbers have plummeted. And the argument was, well, we didn't need the block size. Yeah, if you stifle demand, you don't need a block size increase. I totally agree. On the Bitcoin Cash side, by increasing capacity doesn't mean you increase adoption. So let's get that right too. So it's just a very fine line to thread. And quite frankly, I think both sides are just impractical. Like one's impractical on the conservative side and one's impractical on the liberal side. It's just, who knows how this plays out. But I think that people are focusing on the wrong metrics. They're not focusing on driving global usage and adoption of a cryptocurrency. They're focusing on the philosophical side of it, which may or may not be the right thing.
That's a really good point. So a couple things there. One is when it comes to global usage and adoption, getting people to use it. And I remember, like in December when it was really popular, everyone was asking me about it. And I can go into the backstory, blah, 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 the politics behind it, the crypto anarchy, et cetera, et cetera. But sometimes people are just like, hey, like with Purse, I can save 10 to 15% on Amazon. And I realized, wow, the whole story I told them for 10 minutes, they didn't really care. But when I told them they could save 10 to 15% on Amazon or send money to, a lot of people in Colombia where there's very high remittance fees, send money to their kids studying in France. Like, okay, yeah, that gets them interested. And you have to be, it's, I guess, consciousness, right? Understanding what other people are interested in. And totally, man, I think global adoption, I don't see it as a foregone conclusion, that Bitcoin Cash, Bitcoin cryptocurrencies can win out. You need to get people to use it. One thing that I think makes it kind of tough is kind of a bottom-up thing. So sometimes it's very difficult, and feel free to disagree here, but it can be very difficult to drive, from top down or just organizations to drive adoption when a lot of it comes kind of spontaneously and bottom up.
Well, that's exactly it. So I think what Bitcoin's really done well is it's built this sort of cult following of people who want to use it. But the reality is that the use case has been changed from actual usage to hodling, which I have a huge issue with. Like, holding something is not using it. It's kind of a speculation point. You're speculating that the price goes up because everyone else holds it. So what you're trying to do really is you're trying to reduce supply so that the current volume at the fringe moves the market price up. Because if everyone has this belief that by reducing supply, hodling is a supply reduction mechanism, right? So you're pulling liquid supply out of the marketplace. And by doing that, you want the liquidity at the fringe to move the aggregate price of all the tokens out there. And the hope is that when you want to sell, no one else wants to sell at the same time, or very few people want to sell at the same time. So it doesn't depress the price enough. The problem with that is you have the situation where Bitcoin becomes a marginally liquid, highly volatile cryptocurrency. So it's a kind of a commodity that trades at the margins with high levels of volatility, because if anybody wants to make any big investment or buy or sell, it's going to push the price up and down too much. So think about it this way. It's like having a stock where the float is 10%, right? But having a huge market cap. So imagine there was a stock that had $1 trillion market cap but only had 10% float. So if someone wanted to go and buy a couple of $1 billion worth of that stock, it would just move the market massively.
Matt here really quick. In case you don't know what float is, no worries. Float is the number of shares of a stock of a company that are available for trading. For example, if there are 1 million shares of company X, but only 50,000 are in an exchange where you can buy and sell them, then 50,000 would be the float. All right, back to the show.
And so this is what Bitcoin, this hodling mechanism does. It effectively is a mechanism to manipulate the float of the currency. And the hope is that by moving that float number high and high and high enough, right, that the price goes higher because supply and demand on the float is so high that it trades, and gives liquidity. But the problem is you can't have a cryptocurrency where you can't have any tradable commodity, I don't think, where the volumes are so high at the fringe. And then when someone who's effectively a whale, or it hits a price point where everyone in a certain bracket wants to sell, crashes the price. And now you have this. It's just the volatility and the swings from having a low float, call it asset, is crazy, right? It's a lot better for it to be highly liquid. So 50% or 70% of the coins are traded every single month. I'd be happy with 35% of the coins are traded every single month, and then 2/3 are held back, and people can go in and out of that 2/3 when they want and take longer time. So I struggle with the notion that Bitcoin needs to be a low float asset. I don't think the numbers make sense.
And that's something that we talked a lot about internally. Just it seemed that last December, from our perspective, that a lot of Blockstream and Adam Back were just talking, hey, it's store of value. But if it's just store of value, what are the implications? And I guess another thing I'd like to ask you mentioned, we're not focusing on the right things. We're not focusing on adoption, global adoption.
So a lot of these guys, they just don't understand the economics of the situation, right? So store of value means nothing if you have a low float asset that's seemingly liquid, but the moment the float changes significantly. So if you have a float of 10% and someone adds 1% to that float or increases the float by 10%, it's going to result in high levels of volatility. You can't build a store of value or an asset where literally one person can move the float by 10% or even 5%. It's got to be really so highly liquid and tradable that no one can really move it. And so if you look at the Bitcoins in existence today, and so, I think the real you take away lost coins, Satoshi coins, etc., it's about 14 million coins. And if you say, look, it's, if we all hodl it and only 1 million coins move, on an annual basis, or whatever, 1.5 million coins move on an annual basis, it means anyone with 150,000 coins who wants to go sell into the market is going to push the market in a massive way. Now, I don't know what these numbers are right now, and you probably need to sit down to the calculations, but my sense is that if we get the hodl mentality, to persist, you're going to get to a point where the float is so low, someone with, a couple of 100,000 coins or, 50,000 coins can make a significant dent in the, because remember that also the percentage of trade on Bitcoin that actually goes through exchanges is very small relative to OTCs and other. So it's very easy to manipulate the price of Bitcoin on a low float. So if the float is low, you can dump 10,000 coins in an open marketplace, and then you can do an OTC trade to buy more coins cheaper. And then you can manipulate the price that way.
Another definition here, OTC, or over-the-counter trading. We've talked about this before, but in case you forgot, local Bitcoins or many other private exchanges, unlike Coinbase where you can see the order book, people want to buy X number of Bitcoin at Y price, and vice versa on the sell side. OTC is private, meaning no one is aware of these transactions. All right, back to the show.
So people don't appreciate how important it is to have a high float asset for a store of value.
That's interesting. So two things here. One is in terms of the focus, right? We talked about global adoption, the relationship with Wall Street. How important or unimportant is that in terms of global adoption?
It's kind of funny, right? Everyone's fighting Wall Street, but then the people who want the price of Bitcoin to go up once institutional money walks through the door. So you kind of this is going to kill you guys, but you should buy some before it kills you.
Yeah.
It's kind of weird. I don't know. People are just weird about this stuff. I mean, people care too much about making money from Bitcoin than the change it actually drives in the world, which kind of depresses me because, personally, I don't need Bitcoin to make money or retire. I never did. It wasn't like, it was always a more personal technology passion. And there's too many people who just care about what it means to their portfolio and how much money they're going to make. And yeah, and I get it. Some people just don't have access to deals and investment opportunities. So you take, me living in Silicon Valley, I have access to all the great deals. I can invest in any company and stocks and whatever else, startups. I have good connections. Someone living in the middle of some small town in, even the small town USA, Bitcoin is the best single opportunity he's ever seen. Like literally, like if you bought into Bitcoin in like 2014, and so 4 years later, it's only up 10x. Sure, it was up 30x at one point.
Sure.
I mean, I've got investments that have done way better than that. It's not the greatest investment opportunity I've ever seen right now for me, because I have other investments that can give me 50x, 100x, and how it depends how you structure it. But for someone living with no access to deal flow and no access to opportunities, yeah, it's definitely the best opportunity for them. And so they take it very personally when Bitcoin, goes sideways or down, or someone says something bad about Bitcoin, because it's a personal attack on their wealth. And if you have all your wealth stuck in one asset class and you're subjecting yourself to the volatility and ups and downs, I get it, right? But that doesn't make your emotional state shouldn't override your sensibility.
For sure. So global adoption could happen without Wall Street and ETFs and all that thing. Like it could be used as a global currency without Wall Street, I guess was my question.
As a global currency, I don't think Bitcoin is a global currency. I think Bitcoin is it's being engineered to be a store of value.
Sure.
And I don't see how it gets there. As a global currency, the block size is too small. Lightning Network is not going to happen anytime soon. I mean, it was being promised a year ago, and we're not 6 months out from mass market rollout like everyone was saying. 18 months Lightning Network. Come on. I mean, at best it's 2 or 3 years. So then we would have lost 4 years on a layer 2 solution. I'm not a big fan of layer 2 either, for lots of reasons. And so
sure.
Anyway, look, I'm just one guy in Silicon Valley who's just done a whole bunch of things. I'm getting old. I'm happy to sit back and watch all these guys figure this stuff out. I don't see how it plays out, but I'm happy to be wrong. And so far, I'm not wrong, because people who are promising Lightning in 18 months' time will guarantee right now, they'll say, well, it won't be ready in 6 months. So we're already past that limit. And that's what we said. Well, 18 months, a year ago, it's not ready in 18 months. So, so what's the new deadline? Another 12 months, another 18 months? Well, it probably won't be ready then either. So while the Bitcoin community is trying to focus on layer 2 scaling, there's 1,000, 2,000 cryptos at the door trying to beat them on go-to-market and stuff. The only thing the Bitcoin network has right now for itself is the brand, which is super strong.
For sure.
And obviously the technology is good. But it doesn't mean it's going to last forever. I mean, if you don't capitalize when your brand is strong and you have a network effect. There are less merchants today using Bitcoin than when I was running Gyft. And over the past couple of years, that number's going down, right? Because of the fees, etc. So many merchants have taken Bitcoin off their site. It's kind of sad. We spend so much time building this payment network for Bitcoin, and it's being dismantled. But, if the narrative is being engineered to change, and the narrative is now that Bitcoin is a store of value, I can't see how we get there without high levels of utility and whatever else. But again, I'm one guy. I'm not the smartest guy in the world, so I easily could be wrong.
For sure. I mean, that's the argument for Bitcoin Cash, right? But Vinny, you said you're getting old. You don't look that old, man.
Yeah. I keep my youth intact. I'm 39.
Same age as Razor, man. But yeah, you guys are definitely on maybe the older side in the Bitcoin community.
I've seen the .com collapse. I've seen 2008, and I've seen the crypto thing. And so when you live through 3 bubbles, you're kind of like, okay, getting too old for this shit.
I got you, man.
And by the way, in Silicon Valley, once you're in your 30s, you're old.
But isn't the average founder, the age of average CEO is like 37, I thought. I get what you're saying.
No, I mean, there are a lot of young founders. I think the average successful founder is probably a little higher.
Yeah.
Than the intake at 20 is a lot higher, and the drop-off rate's a lot, it's a higher drop-off rate. But I'd say, look, to be honest, I think founders hit their peak in their 30s and 40s. I've seen some 50-year-old founders who are pretty solid as well. But if you're really good and successful in your 30s and 40s, you don't really want to be doing operations in your 50s. So I'm happy to say that I think Civic will probably be my last operational company where I'm a CEO. Anything else afterwards would be like, kind of a chairman role or whatever it is. So I wouldn't be operational. But because being a full-time CEO it's a tough job. It's literally like I'm on my phone every day. Like anyone messages me in the company, they'll get a response within an hour if I'm in a meeting or not. Like I sleep 6 hours a night. You don't shut off. If I go away on a vacation, I'm doing a couple hours of the phone calls every day. I'm doing lots of emails. You don't shut down ever. It's not possible when you're operational. And then and when you're shutting down, not doing active work, you're thinking about, okay, how do we solve this problem? How do we solve that problem? How, how do we get the company to the next level, etc. So it's not as simple. And I think, and the best CEOs I've met are exactly the same way. You don't turn off, but it takes its toll over time.
For sure. So Vinny, I mean, there's no doubt about it. You're literally a shark when you look for deals on the South African Shark Tank, Dragon's Den, et cetera, et cetera. And I guess you also have with Kyle Somani, like the hedge fund, the investment fund, right? And so, I mean, you got a lot of things going on.
Multi-coin capital. Yeah, hedge fund, yeah. Well, I mean, I'd love to just talk about how I manage things. I think it's always a question, like, how do you manage things?
Yeah.
So the Shark Tank and Dragon's Den stuff, it's in South Africa. We film for 10 days in a year, and you go in. It's pretty intense. It's like 60 pitches. You wind up doing between 5 and 10 deals if you're lucky, because most of the ones are low quality. But so I actually have a VC fund in South Africa called Newtown Partners. It's like my own personal seed fund. I partner with a friend, and they manage my seed investments in South Africa, as well as doing ICO, token economy design and consulting. We kind of got into that because one of the deals I did in Shark Tank was Augmentors. And we launched a token sale for Databits, and the product's launching very soon. So that's been a 2-year project for us, and it's looking really, really good right now.
Can you spell that so I can add it to the show notes? Databits?
So the product's called Augmentors, AUGMENTORS. I think augmentorsgame.com, and the token's Databits. And so that was the first ever Shark Tank deal. I did the deal in Bitcoin on the show. So it was the first shark in any one of the, global Shark Tank series.
Wow.
To do a Bitcoin deal. But the important thing is that I've got this team of 10 people in South Africa, and Lou Clausen, who's also the executive director of Bitcoin Foundation. He runs that company, Newtown Partners, and so my investors all go there. So I have very little to do with the day-to-day running of that company. I mean, I have an oversight, and we have a call once a week, maybe for an hour, just talk about what he's working on, what deals are going on, etc. And that's about it. So I've leveraged my time very well. I go to South Africa twice a year. Mainly, family or business ties, but it's 2 quick trips a year. And then we have an office there we have a team in Cape Town and Johannesburg. So I meet with the team when I'm down there. So most of my time is civic focused. I'd say 85 to 90% civic, but then the 10 to 15% I do other things.
A few quick notes on Civic. Preventing identity theft, securing your own data, a decentralized identity platform. My favorite example is going to a bar in the United States and asking for a beer. If you show them your driver's license, you show them your weight, your date of birth, your blood type, whether you're an organ donor, your address. But the only relevant piece of info is your date of birth. So with Civic, you could prove that you're over 21 if you wanted to drink that beer without sharing other details. That's just one anecdote of all the things that Civic can do. I'm sure you've seen this on many websites. You can log in with Facebook to Airbnb or log in with Google to a new service. And we've seen all the data breaches with Facebook, and they store your identity. So with Civic, you could log in to some of these services like Airbnb, hopefully in the future. And with their identity protocol, be sure that there's no counterparty risk of someone else getting your information and having your identity hacked. All right, back to the show.
And the only other things I really do is obviously I'd help my companies invest in advisory work there. So Newtown's run by Lou, and then Kyle and Tashar, they're the founders and they run Multicoin Capital. But I joined them in December because, I was getting so many crypto deals, I couldn't deal with all of it. So I just basically said, look, guys, I have all this deal flow. I have a ton of people trying to give me capital to invest. And so I joined them in December, and since then we've, I think 5x the fund size. I brought all my capital, friends in, etc. We just kept growing the fund. We've probably the best performing crypto hedge fund this year because we took some very conservative plays on the market because I was like, guys, I've seen this story play out. So at the peaks, I'm like, this is not going to recover quickly. This is going to break down 10,000. So we took very conservative plays. So we've really held our own as much as possible. But all my deal flow I get in crypto, I pretty much send to the team there, and they like it, then they pursue it. But that's a whole, I think 10 plus person team in Austin. And then we have a weekly call for an hour where I sit and chat to them every week and maybe a couple of emails during the week, and that's about it. So like I said, 85% of my time is Civic and 50% other. But the good thing is I learn from all the other stuff that I do, and I try and apply that to Civic. And I've always done this. So all my companies, I always spent like kind of an 80-20 rule. 80% of time is the primary company, 20% is learning about what's happening around in the world, so you can apply those learnings back to your company. And so that's a very important thing, I think. It's kind of like Google's 80-20 time as well. But as a CEO, the biggest mistake you make is keep your head down. So we wouldn't have done an ICO for Civic a year ago at the time we did it if I was like only focusing on product. So I focus on product, but if I wasn't keeping my pulse on the market and seeing what was going on, we wouldn't have spotted the opportunity to go there. So, and not just that, there's so many other opportunities that have come up because I'm keeping my eye out and seeing what's on the horizon, going to conferences, even the Budweiser deal we did with Budweiser on the vending machine in Consensus, where you can use your Civic ID to get a beer and prove you're over 21. That came because I was at a conference and bumped into the Budweiser team and we had a meeting, and so a lot of serendipity happened. So it's very important, I think, for CEOs to be out there at conferences, meeting people out in the field, but you've got to have a really strong team. And I'm very lucky to have my co-founder, Jonathan, at Civic, who, he's the hands-on guy in the office and the CTO, and I've got my COO, Chris, who manages operations and everything else. So I can focus on being the vision, leading from the front lines and making sure we're going in the right direction. And Civic has just continued to execute over the past year. If you look at our blog and everything we've done, so you can link to our blog, everything we've done in the past year, I think we've outperformed every company in crypto and execution from a business and technical perspective. Like, we have a live product in the market working, close to 100 partners signed up and using the product live, and we're executing really well on everything we've said we're going to execute on.
For sure. And I love that mantra, or whatever you want to call it, lead from the front as a CEO. I think it's super important. And identity on the blockchain, why is this important? Why should people care?
So people should care because right now, the biggest risk to society is the centralization of data that's happened through credit bureaus, through companies, and people being able to impersonate you. We have Michael Turpin busy suing, I think it's T-Mobile or someone.
Yeah, the SIM card jacking.
Yeah, so SIM card jacking, etc. And that's because, literally, people can access your life if they get hold of your mobile providers, your SIM card. And I think it's just a lack of diligence by the big companies to protect us as consumers. And also, there's new use cases and opportunities, like being able to buy alcohol or weed from a vending machine, or be able to go to your hotel room and not have to check into the front desk and just scan just tap your phone on the door and lock and get in because your ID is verified. So I think there's a lot of improvements to society. I think most importantly for Civic is, once everyone in the world has a digital ID, we think democracy will be more representative of what, of people, because one of the problems with democracy is the cost to vote is often disproportionate to the benefit of the voter, individually. And so democracy doesn't scale because if it takes you, put it this way, if you had 100 votes, if you had 1 out of 100 votes, 1% of the vote, and it took you 8 hours to stand in line to vote, you'd do it because you have 1% of the vote. Would you do it if you're 1 out of 300 million? You wouldn't spend 8 hours doing it.
Sure.
So as the size of the population group expands, and the nature of democracy means you have a smaller percentage share of voice, right? The cost of voting needs to come down. So the personal cost to place a vote needs to go from 8 hours or 4 hours, or even 2 hours, down to 2 minutes on your phone. And if you can do that, then you can balance out the role we play in society. Because when you do the analysis of, as an example, in the South African election, I'm a dual citizen. I could vote in the South African election, but I could only do it at the Los Angeles embassy. So now I want to jump on a plane, fly down to LA, stand in line. It's at least 12 hours of my day gone. With travel back and forth, etc. Why would I do that if I'm 1 in 50 million people in South Africa voting, right? If I could do it on my mobile phone and it takes me 2 minutes, I would vote. So you'd have higher turnout rates and more people voting in society globally if you could do it from a mobile phone. And so by having an identity layer like Civic, we hope that becomes possible.
For sure. And we, on Blockchain 2025, we covered voting and elections, but the whole idea of turning your cell phone into a voting booth, obviously you have to prove your identity, whereas Civic comes in, right? Civic's going to integrate with so many blockchain dApps, I think. And also one thing that obviously, you've done very well, you're quite wealthy. It would be a lot of your time, but you could do it. But I think a lot about, we have this arbitrary Tuesday voting day, and someone, maybe a single mother, they can't afford to take off work to go vote, right? And that's a big thing as well.
So that's the example I always use in South Africa. People who literally can't afford to spend a day voting because they eventually made it a national holiday to encourage people to vote, so you get paid anyway. But it's still it's a day. And then those people, here's a funny thing. So it's a national holiday, you get paid. But now the employer is well, we can't shut down just because it's a national holiday. We have a food business in a busy mall. We'll pay you double time. So you're ooh, okay. I get paid double time. I'd rather go work. So now it's is it still worth you voting? No. So, we don't solve the problem by creating national holidays for voting. We solve the problem by making it really easy and faster. And then forget about, let's not talk about voter fraud and tampering, because that's a whole different discussion. Once you have an identity layer and you have blockchain-powered voting, this all becomes solvable.
For sure, man. And last question for you, Vinny, outside of identity, which is, I'm personally really excited about it. What are you most excited about in the blockchain crypto space in the next couple of years?
I think IPFS and Filecoin are going to be literally the game changers. Yeah, IPFS is I'm one of the first investors in Protocol Labs back in 2014, and I've been a big supporter of the company and what they've been doing. And I think that the technology is going to fundamentally revolutionize the way the internet is structured and built. And Filecoin is a game changer. So I think it's going to be a massively disruptive company and project.
Listeners, final definition here, IPFS, the Interplanetary File System. Think of a decentralized Dropbox and much more, but the whole idea of storing files, and it could be the backbone of a new internet. Again, we'll link to IPFS so you can read more, but I just wanted to give you a little bit of context for what Vinny's talking about here. Okay, back to the show.
And so that's what I think I'm most excited about right now.
Cool, man. Hey, well, Vinny, great talking to you, man. I learned a lot, and I really appreciate your time, man.
Likewise. Anytime. Thank you very much. Thanks for having me on the show. Cheers.
You've heard the buzzword blockchain, but what impact will it really have on the world? Listen to the Blockchain 2025 podcast to find out more. In each episode, we take a hard look at one industry, like gambling, art, international trade, or wine, and we debate how it could be impacted by the blockchain. Subscribe on iTunes, Spotify, or wherever you get your podcasts. Part of the Bitcoin.com podcast network.
Thanks for listening to the Bitcoin.com podcast network. To learn more about our shows, visit Bitcoin.com/podcast. Bitcoin.com podcast network.